Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the crypto markets. And for those who like to read, obviously this coincides with the blog that we write every week on our website. That's Our Two Satoshis on the website ar.ca/blog. I'm joined this week by Brian Rudick, Chief Strategy Officer at uPexi, which, for those who don't know, is, what are we calling it now? Crypto treasury company, a digital asset treasury company. What's the best description here?
I think the latter is what folks are going with, but anything works.
Good. We'll call them DATs, DATs, digital asset treasury companies. Brian, long history in the crypto markets, obviously at GSR for a long time, now CSO for uPexi. Recently raised a $100 million round with the purpose of buying Solana in its treasury. And this is good timing that you're here, Brian, because I just wrote about, a good 6-7 pages on our blog this week talking about what are these digital asset trading treasury companies. What's the good? What's the bad? Rather than people hearing it from me, though, because they can read what I wrote already, I'd love to hear your thoughts on kind of how'd you end up from GSR over to uPexi, what the strategy is, why Solana, the good, the bad, the ugly, everything that's happening with this latest craze in the crypto market.
Yeah. Well, thank you, Jeff, and really appreciate having me on. So much to talk about, and it's this really exciting movement that's happening right now. When I think of digital asset treasury companies, I think about companies that are not only seeking to acquire digital assets for their treasury, but also actually accessing the capital markets in order to buy more. I think that there's two components to this. One is this external visibility component, where you need to raise awareness for the company and demand for the stock. And then the other side of things is the intelligent capital issuance component too, because that's where a lot of the magic actually happens when you can access the capital markets in a way that is accretive for shareholders. You can actually get into this virtuous cycle where shareholders can really benefit and actually possibly do even better than holding the underlying token itself. Um, in my mind, so I could back up, I actually spent a decade on Wall Street, mostly managing a book of bank stocks in a long short construct. And I mention that because digital asset treasury companies are essentially banks. They are borrowing from the capital markets at a certain cost of capital, and they are investing into a digital asset to earn a certain return. And when the market thinks that return will outpace that cost of capital, it earns a spread. And when that spread is positive, they will present value that, add it to the NAV, and they should trade at premiums. And so I actually thought of doing something like this while I was head of research at GSR. This was back in November. We partnered with uPexi, which is a small NASDAQ company at the time, to raise funds to invest in a Solana Treasury company. And it was really this background that gave me confidence that to not only understand the whole construct, but to really internalize where all this value creation for the benefit of shareholders comes from.
So let's talk about that because look, we know the investment bank who helped you with this deal makes money because they get a pretty risk-free underwriting fee for doing, for not taking any principal risk, right? We know that the management team of uPexi will do well here because of the 100 million you raised, not the entire 100 million is being used to buy Solana. Some of it will be held back for corporate expenses, salaries, etc. We know existing uPexi shareholders did well because the stock's already up 500 or 600% since the announcement. Why will pipe investors like ourselves, just for the disclosure, Arca is an investor in the uPexi pipe. Why will pipe investors and then new investors with any new additional capital markets transactions that you guys do in the future, debt, equity, et cetera, why will these new cohort of investors do well on this deal?
Yeah, so new investors can do well because there's just so many different ways for digital asset treasury companies to create value for shareholders. And this comes through having multiple value accrual mechanisms. So these are things like the ability to buy discounted locked SOL, which investors wouldn't otherwise have access to. These are things like us being able to stake and being able to do so, either run validators or put pressure to push down commissions and maybe even get back some of the block rewards. And then really a lot of in my mind, the biggest value accrual mechanism is access to capital markets. So most of these companies are doing this in two different ways. One is raising equity. When you can raise equity at a premium to underlying book value, it is by definition accretive. And so this is like MSTR. Raising it 2 times is literally tantamount to selling $1 for 2 or buying Bitcoin half off. And this is how MicroStrategy created a $13 billion Bitcoin gain for shareholders last year. A lot of digital asset treasury companies, including ourselves, are trading at this premium to book. So you can leverage that for the benefit of shareholders.
Well, to be fair, though, I agree with everything you said up to that. That last one, though, that benefits the company more so than it does for shareholders, right? If you're essentially selling new shares at a premium and then buying the underlying SOL at a cheaper rate, that dilutes the existing shareholders and any new shareholders who buy that, right? So that's, ultimately that can be accretive over time if you are acquiring an asset that then performs incredibly well. But selling for $2 and buying for $1 doesn't help shareholders, at least that day.
So here I can run you through the math. So I start a company and I want you to invest in it, and you will give me $100. I will give you 100 shares. It's $1 a share, and you own 100% of it. Market cap's $100. And then remix that $100 into Solana. It takes on this 5x multiple, and that is now worth $500. And so you own 100% of a company worth $500. Now I want to go out and raise another $100, but because I'm trading at $5 a share, I actually only need to issue 20 shares. And so I raise that another $100. I issue those 20 shares. I pull in that other $100. I also remix that to Solana, and that $100 takes on another 5x valuation. So that's another $500, and the whole thing together is worth $1,000. And you, as a shareholder, you own 100 shares over 120, so you own roughly 85% of it. And so that means that your investment went from $500 to $850. You've just seen a 70% return because of one accretive equity issuance that I did. And by the way, you invested, at 1 times, and you've seen this move up, and so you've had an 8.5% return, with a lot of that coming from this accretive equity issuance because we're issuing equity above book.
And that's true for primary investors, right? Guys like ourselves who bought the PIPE, or anybody who buys a future capital markets transaction. What about the secondary market? What holds that premium to NAV at that 5x that you're talking about instead of converging over time down closer to 1 times NAV or even below NAV?
Yeah, so there's a couple of different reasons of why, in my mind, they should trade above book value when the market has a positive view for that digital asset that the company holds. Number one, I think folks will actually just pay a premium to access crypto in the form of a familiar equity security. You saw this with Grayscale's GSOL, which was a closed-end fund, and this was before it filed to convert. It was trading at a 500% premium to the underlying. I also think folks will pay up to access these different value accrual mechanisms that they couldn't otherwise access. So these are things like buying locked SOL at a discount. And then I think like the big thing is just paying up to be able to access our capital markets strategies. And so putting my bank investor hat back on, basically, if you're able to borrow funds at a certain cost of capital from the capital markets, invest into Solana or any other digital asset, and when investors think that that return of the digital asset will outpace your cost of funds, you earn this spread. That spread is positive, and you earn it not just this year, but in future years too. And then the market will go back and present value that, add it to the NAV, and that's when it should, adds up to something worth more than the actual underlying value of the tokens the company holds.
Yeah, I think that's one of the other arguments I've made is that I think there is a world in the future too where some of these digital asset treasury companies can ultimately become like the Berkshire Hathaway of digital assets. Meaning, MicroStrategy, for example, has accumulated so much Bitcoin. If you actually believe there is a world one day where Bitcoin becomes such a scarce, valuable asset, you could see a world where a company who's going to be acquired would be willing to take a lower price from Michael Saylor and MicroStrategy than they would from someone else because the currency that they're paying with is Bitcoin, which is impossible for them to get in that kind of size anywhere else. And you can see the same thing potentially with Ethereum or Solana or other tokens, that one day, if this is such a valuable network, that it is easier to accumulate in big size from one of these digital asset treasury companies than it would be to go out there and acquire it on your own. So there is an end game there as well. I'd say the other one is, and I'm curious your thought here, is that ultimately some of the transactions that you can do with Solana is obviously even more beneficial than what anybody can do with Bitcoin, right? Meaning like Bitcoin is, for all intents and purposes, kind of a pet rock, right? It doesn't have any financial value, it doesn't have any real utility value or any, so it's really 100% social value. Whereas Solana and Ethereum have kind of all three, right? There's real financial value with Solana, as you mentioned, if you're staking and being able to earn real financial gains. There's obviously real utility that you can use Solana throughout the ecosystem, both in terms of paying gas as well as collateral for doing options or derivatives trades. There's clearly social value in that people want to be part of some of these ecosystems. Sometimes to a fault, right? Some of the religious cults that built around these. Do you think that is that some of the extra value here with Solana? Is that you guys can be creative, almost basically running a hedge fund inside of a publicly traded stock vehicle, where you can find different ways to, earn that higher Solana per share or that Solana yield?
I do think that there are additional things that a company built around an altcoin can do that can, I don't know if I should say it, but improve on the MicroStrategy model. So you can stake your tokens, which is effectively turning your treasury into a productive asset. You can buy locked tokens at a discount, which provides for built-in gains as over time that discount will move to par. So I do think like there is room there. And then lastly, I've always looked at things as like Bitcoin is the best monetary asset. And in my opinion, Solana is the best high performance blockchain. I do think you have seen and will see more of these digital asset companies coming out built around different assets. And one of the things that uPexi has going for it is it's underpinned by Solana, which I do think is an endgame winner in terms of the high performance blockchain. So I think it's really important for investors to look at and see what digital asset the company is building around, and completely agree with your point. Just depends on what you want to be underpinned by. And that could be a store of value like Bitcoin, or that could be essentially this computer in the sky like Solana.
And you got guys like Jim Chanos, former famous short seller, doing the MicroStrategy arb trade right now, where they're shorting MicroStrategy stock and buying the underlying Bitcoin. But there's obviously a lot of scenarios here where that just doesn't work, right? The price of Bitcoin could go nowhere for years, and the premium could reduce over time, but still the stock price could go up because they're adding more Bitcoin in there, right? Like, for example, let's say there's $1 billion of Bitcoin in the pot, the stock's trading at 2 billion, all of a sudden, trading at 2 times NAV. All of a sudden you are doing a $500 million convert where you use the proceeds to buy Bitcoin. Even if the premium converges slightly, you still just made your underlying Bitcoin go from $1 billion to $1.5 billion, which would make the stock price go up, even if the NAV collapses. And the price of Bitcoin went nowhere. So like that's where I think guys like Chanos, even though obviously very famous short seller, certainly a smart investor and has a big team behind him, they don't seem to understand that this is not just a pure one-to-one bet on the underlying token. And obviously with uPexi as well, like a big part of the growth of the uPexi shareholder base will be because Solana goes higher, but it's not solely because Solana goes higher. It's also just your ability to access the capital markets and grow that Solana per share, independent of the price of SOL. And I think that's a big part that people are missing, and one of the many misconceptions that we wrote about in this week's blog, because I feel like we've been fighting this for years in the crypto space, just a complete lack of information, misunderstanding of how some of these vehicles work.
Completely agree. And I think one of the things that people don't fully understand or internalize yet is that a lot of these things will work one way. And what I mean by that is when you're trading at a premium, you can monetize that for the benefit of shareholders by issuing equity above book, which is accretive, as I mentioned. And then if you happen to trade closer to book or even at a discount, you actually just don't do that. And I think if you look and see what MicroStrategy has done and measure this in terms of their Bitcoin per share metric, in 2021, I think Bitcoin per share increased something like 50%. In 2024, Bitcoin per share increased 74%. And then in the 2 years of bear markets in between, they still had some increase in Bitcoin per share, but it was more like mid-single digits. So the strategy was a bit more on pause. So they can still utilize like intelligent capital markets issuance for the benefit of shareholders in really good environments, and then just kind of not act on it and be a bit more on pause during bear markets.
Sure. Well, also too, I think another misconception is a lot of people said like this is a big risk to the underlying crypto assets, meaning Bitcoin is going to sell off because strategy has to sell a ton of it and be liquidated, or in Solana is going to sell off because uPexi has to liquidate. First and foremost, I think this is just a complete misunderstanding of the difference between owning a spot asset versus owning levered futures, right? These people who think that you just get liquidated every time price goes down don't seem to understand that there's no real trigger in these instruments, right? Unless you've issued a ton of debt and you can no longer pay interest on that debt and therefore default, there's no real mechanism to force a sale of the underlying asset. We wrote a lot about that in our blog too, but like that's misconception number one, right? There is no forced mechanism to sell. Even if the stock trades down 80%, it doesn't mean you are forced to sell the underlying Solana. It simply means the stock is trading at a discount to the net asset value. And also the other one is, what could cause a forced sale of the underlying asset would be activist investors coming in, right? To your point, if uPexi has $1 billion of Solana in the treasury, but the stock trades at $400 million, an activist investor will go out there, buy as much of the stock as possible, try to replace the board, and try to get you to force sale the Solana to then buy back the shares. But all it takes is one instance of that where immediately the gap to NAV closes, right? Because as soon as the investor base gets wind of the fact that somebody's going to go out there and try to buy all the shares and force a sale of the underlying, then that discount to NAV closes immediately, right? And this is a big difference versus the grayscale trusts, was that there was no mechanism either way. There was no mechanism, like to take the grayscale Bitcoin trust, up until the ETF was issued. There was no mechanism to force grayscale to sell the underlying Bitcoin, but there was also no mechanism to get the discount to NAV to close when it went the other way. Whereas here, because these are publicly traded stocks that have an underlying asset that can be moved very easily, it's very easy to do maneuvers like that. So I think that the fear of this thing trading at a material discount to NAV is very overblown, because it would close almost instantaneously as soon as there's wind of investors coming in trying to force that, right?
I think that's exactly correct. So on the first topic of credit risk, I think it is actually super important for investors to actually look at the amount of leverage a company takes on. MicroStrategy has committed to only take on 20% leverage. And I've seen different analyses on the amount of credit risk. They have so much unencumbered Bitcoin, and they've laddered all of their convertible debt that essentially you would need Bitcoin to fall 95% for 5 to 7 years and kind of stay there for there to actually be some credit risk on their bonds. And I think if that happens,
realistically, by that point, you have bigger problems than MicroStrategy selling their Bitcoin. If you already lost 95% of your value, the pile-on effect of MicroStrategy selling is not really your biggest concern.
That's exactly right. And then in terms of like if these companies trade at a discount, I think that you're exactly right. There's different things you can do. So like MicroStrategy has pledged never to sell a Bitcoin. uPexi similarly has a buy and hodl strategy. But if a company really wanted to, you can actually play that discount in the exact opposite fashion, which basically means you would sell your digital asset and then buy back your stock. And that also would be accretive for shareholders. And in fact, you actually don't even need to do it. Like you mentioned, you can just kind of hint at doing it. And if you did that, then the market should buy it for you and close that discount for you. So if they thought you were going to buy your shares all the way up to NAV, they'd want to get ahead of that and enjoy that appreciation. So they would likely close that for you.
Exactly. And also, I think, the one thing that was interesting about Strategy doing this was they did have a core business besides just buying Bitcoin, right? They were generating anywhere from $50 to $150 million of EBITDA, which means that you can afford your corporate expenses and your interest expense on your debt independent of the underlying asset. How does uPexi and some of these other new ones do that? Like, we know DeFi Development Corp is out there buying Solana. We know that Solana Strategies on the Canadian exchange is doing that. What is the differentiation of uPexi? What's interesting about what you guys are going to do? Where does the money come from to pay for future interest expense if you do access the debt markets? Just help maybe differentiate this one versus some of the other ones that we're seeing now.
Yeah, so we have staking yield, and staking yield could more than cover any sort of level of debt that we might take out. And yeah, what I'd say, we feel like uPexi is really well positioned to be the canonical Solana Treasury company. We are the largest, both by market cap and number of SOL held. We do have a first mover advantage from being one of the first to actually launch. We are backed by 15 different leading crypto VCs, including Arca. and a lot are reaching out for different ways that they can help. And then what I'd say is we have a strategy where we seek to maximize shareholder value, but doing so in a risk-prudent manner. And so what this means is we will not over-lever, we will only use qualified custodians, and we diversify amongst them, and we will not partake in degen on-chain activities. And we think that this will gain us access not only to crypto investors, but also to traditional investors as well. And we want to make sure that we have a strategy that resonates with them too, because the investor TAM there is literally 40 times the size of your crypto investors. And then lastly, I'd say I think we have a top management team. So our CEO, Alan Marshall, founded XPO Logistics, which is a $13 billion company. And then I spent a decade on Wall Street at a lot of top firms like Citadel and like Millennium. And so we have deep connections there that we're seeking to leverage to really do this in a big way on both the crypto side of things and the traditional finance side of things.
Yeah, it's really fascinating. I mean, obviously, you almost have two worlds right now, right? You've got crypto, the asset, and you've got crypto, the underlying technology, or blockchain, the underlying technology. I think most of us in this industry want to see a world where the world's assets come on chain, meaning we want stocks, bonds, and real estate ultimately to be on blockchain rails. The flip side is that you're seeing a lot more of the opposite happening, which is crypto assets being moved to antiquated T+1 kind of equity rails via the ETFs and now via some of these crypto treasury firms. I think there's room for both. But what's interesting, probably more than that, is just that the amount of just misinformation and misconceptions that just circles crypto at all times. Most of these are very easily debunked. I mean, like I said, we've been debunking the MicroStrategy fallout for 5 years. I mean, the first article I ever wrote about how people were just completely misunderstanding how MicroStrategy worked and why there wasn't going to be any forced liquidations because the debt covenants didn't force any sort of sales. It's the same thing over and over again, right? I think there's just a cohort of people in crypto and investors in the TradFi world who just want to hate on everything touching crypto, regardless of facts. And if you actually break down what's happening with a lot of these crypto asset treasury companies or these digital asset treasury companies, there might be risk down the road, 5-10 years from now, if somebody just saddles up with way too much debt. And like you said, if the price collapses already so much that they have no choice but to sell some of the underlying assets. But there's really no near-term measures here that's going to force any of the sales of these underlying assets, right? They're really just, essentially, this is just crypto hedge funds tucked into a public vehicle. And as long as you have a clear mandate of what that hedge fund can and can't do, it's pretty straightforward. And in this case, like you said, just accumulating the Solana and using Solana to generate yield on via staking and other methodologies, it's pretty straightforward and pretty transparent. And it's actually quite shocking to me that there's so much confusion and so much misinformation around something that, takes less than an hour to really research and understand. So, we'll see if the markets come around. Obviously, the markets are speaking in the sense that these things keep trading up and people want the exposure. And it's clear that, just like MicroStrategy being the first to do it, where they accessed the debt market, the convertible bond market, the preferred market, and the equity market, giving all four cohorts of investors access to crypto, whereas they didn't previously have it. The same is now true with these other assets, like uPexi doing Solana and I forget the name of it, the one doing Ethereum with the $425 million raise. This is just new investors who are getting access to crypto that didn't otherwise have it before, and that's a positive no matter how you spin it.
I completely agree. I think not only are these companies really good for investors because of the way they can create shareholder value, but also actually really good for the ecosystems too. And the reason why I say that is these are effectively one-way acquisition vehicles to where they want to acquire and hodl as much of the digital asset as possible. That in theory should push up price. And while price is far from the end game, that can actually do really well for the ecosystems for acquiring users, developers, and dApps. And then the second thing, which is much bigger than that, is it will raise visibility. I can't tell you the number of institutional equity investors that I've spoken with, and also sell-side research analysts that I've spoken with, that are basically telling them all the great reasons why Solana can be an endgame winner. And so we're basically out there teaching folks about Solana as a blockchain and all of its great benefits. And I think that will really raise the ecosystem's visibility and serve it really well as well.
Terrific. Well, this is great, Brian. I appreciate you coming on. Like I said, I think it's timely. Almost everyone in our ecosystem talking about this now, trying to understand it. Again, for those who want to read a more detailed piece, you can go on our website, ar.ca/blog, and read about what we wrote, facts and myths about digital asset trading companies, treasury companies, and also obviously everything with uPexi being a public company, ticker uPexi. Everything's now public. You can read the S1. You can read any subsequent 8Ks. Brian, where can people reach you if they want more information?
Yeah, you feel free to email me anytime, brian.rudick@upexi.com, or you can message me on Telegram. It's just @BrianRudick, all one word.
Terrific. Well, we wish you a lot of luck with future transactions here, and looking forward to seeing uPexi grow. Appreciate your time, Brian. We can have you back on anytime if you want to talk more about the development and evolution of these digital asset treasury companies and everything happening at uPexi. So that's it for this week, guys. We'll be back again next week. That's our 2 Satoshis for June 3rd. Talk to you soon, everyone. Thank you. And thank you, Brian.
Thank you.